Welcome to Mad Money. Welcome to Cramerica. Other people make friends. Hey, I'm just trying to make a little money. My job is not just entertain, but to, well, put it all in context. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. We keep hearing that all the AI spending by the hyperscalers, the nation-state companies like Google or Microsoft, has to stop eventually. It's not worth the price. They'll regret it. They aren't getting a lot out of it. And then you get a quarter like the one Alphabet reported yesterday, where they added $10 billion to their already $75 billion capital expenditure budget, and you realize just how off-base these criticisms might be. As long as the spending continues to make sense, and that makes, well, it sure seemed made sense when in the case of Alphabet, which is the parent of Google, it seems like these investments are both urgent and needed. That spending is also a big part of the reason why this market can hang in there. Dow declining 316 points, but the S&P advancing 0.07%, and NASDAQ gained 0.18%. Last night, I listened to Sundar Pichai. He's the visionary CEO of Alphabet, talk about AI and how much it means to his company. I'll just give you one quote here. AI is positively impacting every part of the business, driving strong momentum. This quarter, search delivered double-digit revenue growth, end quote. But then he goes on to say, AI Overviews now has over 2 billion monthly users across more than 200 countries and territories and 40 languages, end quote. Now, if you don't use Google, these AI Overviews gives you the summary that appears at the top of the search pages. It's a game changer that makes people want to keep coming back to Google search, even as many, like me, worried that search may go the way of the dodo. I mean, why do search? I figure when you can just go right to one of the major chatbots, avoiding Google search entirely. They're not. They're going to more than ever. Pichai explains they're not mutually exclusive. It's easy to just stick the AI results in there because, well, he's got the leading global network of AI optimized data centers. In other words, he who spends the most money on AI wins. I am sure we'll hear something similar next week from Meta and Microsoft and Amazon. I wish I could say the same about Apple, but it remains on the sidelines. When you hear about this spending, you should be thinking one thing. Nvidia. You can't be dominant in search unless you buy the latest and greatest chips from Jensen Huang, CEO of Nvidia. The naysayers tell us that spending is a big waste of money. But if you listen to Jensen, he says his best hardware and software stacks can give you 4 times your money's worth. Given what Alphabet said last night, you know what? I think it probably works out to about 4 times. Now, Nvidia is not a tax on the system. It's an expander. It's a force multiplier. That's why it is so important for the U.S. government to allow China to have a version of Nvidia's AI technology. You know, we tend to assume that China makes everything we want while needing nothing from us, aside from those Nvidia semiconductors. That's not really true. We're beginning to get cheaper products from elsewhere, by the way. We know from Judy Marks, the CEO of Otis, the elevator company, that China's business is miserable right now. We know from Jim Fitterling, the CEO of Dow Inc., that China's no longer the cheapest place to make plastic. Just pick those two because it happened in the last 24 hours. Really, China's got 2 things going for it. It's got electric cars and first-class military. But what it needs more than ever is Nvidia's chip stack. That's the only reason they're willing to make a deal with us on trade, even releasing their chokehold on rare earth minerals. Nvidia. Still, the skepticism is thick and, frankly, somewhat justified. I'm heavily reliant on some of the chatbot sites, not all, but I spend a lot of time on them. I'm chiefly on Grok, the Elon Musk site that spoke about in this otherwise not-so-hot Tesla conference call last night. I checked the advanced ChatGPT, mostly out of respect for Sarah Fryer, the fabulous CFO of OpenAI. I use Claude from Anthropic because my computer-savvy daughter tells me it's the best one right now. Meta AI is my go-to for pop culture. And I'm on Perplexity probably 25 times a day, if not more, in part because Jensen Huang told me he looks at it regularly, which got me hooked. Last night, in a rare game to be actually human, I went out with my wife and her friend, something I never do, especially during earnings season. It was a huge amount of fun, by the way, definitely kind of playing hooky. And I realized when it was over, I was way behind the 8 ball when the dinner broke up, even as I remembered why people go out to dinner, because it really is kind of fun. So I decided I needed to take a shortcut of AI and began to prompt the sites for information about some earnings. For the first Chipotle, I got a couple of nuggets, but I knew I'd have to wake up early and read through that one. Then I put in IBM, and all the sites had the same thing. Software was a little soft. Nothing else, though. Then I knew I needed ServiceNow, okay? Because it seems to have the most exposure to AI as a software, as a service play, and you got to know what they're saying. I knew the stock had enjoyed a significant move higher after the bell last night, although some people said it couldn't last. So what I did was around 10:30, 11 o'clock, I went to one of the chatbot sites. I will not reveal which one because it's so embarrassing. And I put in the prompt about why did ServiceNow stock go up after the company reported and then down after the conference call? Because that's what I figured would happen. There appeared an astounding story about how the slowdown in enterprise software had finally hit ServiceNow, and the company's high valuation made it very vulnerable. Now, I knew there could be some weakness because the software as a service sector is not as strong as it used to be. They charge by the person, and if AI is replacing humans, that means fewer people. But I started jotting down notes about what caused the real weakness and how management addressed the weakness if they could. I knew I had a good story about the decline and fall of ServiceNow. Until the next day, when I checked some actual news organizations and saw the stock was actually flying high after a much better than expected quarter. The story I read on the AI-generated site was 100% wrong. They know nothing. Now, I don't know why this ridiculously embarrassing incident even occurred, but it's not exactly unusual for these AI platforms to make things up. Here's what I do know. The more new chips you have from Nvidia, the less likely your AI will get things wrong, like I saw last night about ServiceNow. I also believe there's so much skepticism in large part because people simply don't trust the answers they get from these platforms. You know what? Rightly so. So my take is that Google is upping its spending because the most accurate chatbot will be the winner, just like how Google Search won to begin with. The bots that are wrong too often will lose. And just like Google Search, if you win the AI race, you can end up with a near monopoly and hundreds of billions of dollars in profits. My conclusion, these companies aren't overspending on AI. They are actually underspending on AI. Underspending. See, this is a winner-take-all, loser-take-none situation. The only reason to spend less is if you don't believe you can win. Bottom line, that's the reason why Nvidia is the largest company in the universe. It's why Apple has to use this moment to make a good site great. And it's why Google is still in the conversation and might even end up winning the battle for AI just like it won the battle for search. Gabe in Michigan. Gabe.
Hey, Jim. Big booyah here from Michigan and club member.
Oh, thank you, Gabe. Thank you very much. Jeff and I were really cooking today on the Honeywell and Danaher, weren't
we? Yes. I question for you, sir. Given the significant program charges and reduced cash flow in Q2 here, how do you assess its ability to sustain long-term growth, especially in light of the increased defense demand and ongoing development challenges and legacy programs for Lockheed Martin?
Look, I know Jim Takelet. I know he's going to figure this out, but everybody tells me, every single research node told me that you have to buy Northrop Grumman for when it comes to the weapon, the big defense procurement. And I still like AeroVironment, AVAV. I mean, it was AVAV. He broke the story. Nawabi broke the story about why things were so great there, and that stock is up about 90 points since he came on the show, and I'm sticking by it. Now we're going to go to Ali in New York. Ali.
Hi, Jim.
Hi, Ali. What's up?
Hi. Good. First, congrats on 20 years.
Oh, thank you.
I'm up 17% on the stock I bought this spring. It is 70% up this past year, but it's still down 39% from its all-time high, and it's down almost 10% this month. Morgan Stanley issued a positive note on its new CEO, but they've had insider selling recently, and it is enterprise software. I'm wondering if they report a good quarter next month, should I sell or trim my position? The stock is Snowflake.
Okay, Snowflake. Well, Sridhar Ramaswamy came on our show and broke the story of that much better than expected quarter. And I say you just hold on to this. There's going to be ups and downs. Maybe it takes a little of the fluff out of it. But Sridhar is good for it. And I think that could be a great long-term position. I like the stock of Snowflake. Right, the AI race, it could be a winner-spend-all situation. I think the only reason a company wouldn't spend money is because they already think they're going to lose. Well, maybe tell you, Honeywell reported an earnings beat, but the stock fell in response. So are investors getting an opportunity to pick up a high-quality name at a discount, or am I just a complete and utter idiot? I'll tell you what, let's check in with the CEO to find out. Then I was worried about the club stock Danaher, DHR, going into this quarter. But the report really helped us solidify our thesis. I'm going to give you my take on the name. And we're all about covering the stories that you want to hear, even if I think they're too speculative. So tonight I'm checking in with one that I know you're interested in, a quantum computing company called IonQ. You get a read on the state of this burgeoning industry, and I'm going to cover every single one of these from now on. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.